In other words, we will restart the clock by going wave 1, wave 2, wave 3, wave 4, wave 5. Each of those waves, 1, 3, and 5, go to higher pricing. Then you'll get your correction. All things being equal, we've got 1, 2, 3, 4, 5, and this is the highest price gold's ever been. We'll weather this correction. Once that concludes, the bull count restarts, and that's going to pick up $400 or $500. And how many of them do you get in a year? Typically, you get 2 full counts. And so I'm very bullish. I'm not going to give you my exact numbers yet. We'll save that for the outlook, but I'm exceedingly bullish for gold next year.
Gold markets have remained relatively stable this week, with gold dollar hovering around the $2,640 mark, despite retreating from an intraday high of $2,650.50. From a technical standpoint, the daily chart for gold dollar shows little change from its opening levels, with prices confined to familiar ranges. Despite this near-term indecision, market analysts and strategists remain optimistic about the long-term trajectory of gold prices. The gold forecast editor Gary Wagner highlights that gold's long-term trend points to higher prices, underpinned by favorable macroeconomic and technical indicators. His analysis suggests that the ongoing bullish cycle could push gold to new record highs by 2025. Similarly, Lina Thomas, a commodities strategist at Goldman Sachs Research, underscores that falling interest rates and consistent central bank demand for gold are key drivers of this anticipated rally. On November 18th, Goldman Sachs reiterated its forecast of gold prices reaching $3,000 per ounce by the end of 2025, reinforcing their bullish stance. Several factors continue to support gold's appeal as a safe haven asset. Central banks remain significant players in the gold market, even though purchases slowed during the third quarter. Analysts expect demand to remain steady as countries diversify their reserves away from the US dollar, reflecting concerns over global economic stability. Ongoing conflicts and geopolitical uncertainty have also kept gold's safe haven appeal intact. While recent developments in South Korea have not spurred a significant price reaction, analysts suggest such factors add to gold's underlying strength. Falling interest rates further enhance gold's attractiveness by reducing the opportunity cost of holding a non-yielding asset. With central banks expected to lower rates further, this macroeconomic trend aligns with the broader bullish narrative for gold. While short-term profit-taking has occasionally weighed on gold prices, particularly following events like Donald Trump's political resurgence, the fundamental drivers of gold's strength remain intact. As Wagner notes, combining geopolitical uncertainty, sustained central bank purchases, and a low interest rate environment provides a strong foundation for gold's continued rally. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
In the market to take it to the levels it did, and then determine if those items are still in the market. If we look at the start of January in 2024 up to this high, realize we've still got a month. Gold gained 29%, $646. But as I said, I believe that the actual rally began in October. And so you had here 12.27%, 244 plus 646. So you've got $900 in this area. And so far, we have given back roughly 6.65% at current pricing. Of course, if we take it to where this low was, but it's not there now, we were down 9% from there. So we had strong momentum. Now, what was that based on? It was based on central banks accumulating. It was based on inflation. It was based on geopolitical conflicts. And let's take a look at each one of those, and then Fed. And there's other variables. Geopolitical conflicts are still fully in play, although there was a ceasefire on the Lebanon side in Israel, which is a great thing. You don't want that war to widen. Then you've got Ukraine and Russia, and that, in fact, has been ramping up. Biden allows changes the restrictions on targets that can be hit inside Russia. Russia has been devastated. I think they're losing about 15,000 troops per month. They're bringing in North Korean soldiers to aid in the fighting. I think it's just cannon fodder. They're just putting them in the front. But the thing is, we don't see a de-escalation there. So if those are one of the primary factors that move gold higher and they're still in play, I would expect that to create bullish undertones. The next thing is inflation. Inflation has been coming down. And as it comes down, there's a standard correlation. Higher inflation leads to higher gold and the reverse. But what's going on now is central bank interest rate normalization, because gold doesn't yield as an asset, it doesn't yield any percentage of return. Interest rates move down, it makes bonds, securities, and things like that less attractive because the yields are going down. So I expect the Fed to do a 0.25% rate cut this year or in December. That would be a total of 1%. Their goal is to take current Fed funds rates to 3.5%. And I believe they'll get there by, could be the second quarter of next year down to the third quarter. Lower interest rates are going to be a bullish undertone for gold. In other words, we will restart the clock by going wave 1, wave 2, wave 3, wave 4, wave 5. Each of those waves, 1, 3, and 5, go to higher pricing. Then you'll get your correction. All things being equal, we've got 1, 2, 3, 4, 5, and this is the highest price gold's ever been. We'll weather this correction. Once that concludes, the bull count restarts, and that's going to pick up $400 or $500. And how many of them do you get in a year? Typically, you get 2 full counts. And so I'm very bullish. I'm not going to give you my exact numbers yet. We'll save that for the outlook, but I'm exceedingly bullish for gold next year.
Gold has recently completed an Elliott wave cycle, reaching a peak of $2,800 before entering an ABC corrective phase that saw prices retreat to $2,566. While traditional patterns might suggest further declines, recent gains hint at a potential end to the correction if prices surpass the $2,690 level. Analysts, including Gary Wagner, foresee a strong bullish trend for gold in 2025, driven by favorable macroeconomic and technical conditions. Should gold break above $2,725, the $2,800 level would become the next significant target, reinforcing the strategy of buying on dips and finding value in the market. There is little interest in shorting gold unless prices break decisively below the 200-day exponential moving average, which is nearing the $2,500 level. Until such a scenario unfolds, buyers are expected to remain active, supporting the metal's resilience. Technically, gold is testing the 50-day exponential moving average, which remains relatively flat, while an uptrend line provides additional support just below. The convergence of these technical factors suggests the market is at a critical juncture. The upcoming non-farm payroll report on Friday will be a key influence on the US dollar, which could in turn affect gold prices. Let's get back to the interview.
A chart. It's a basic daily candlestick chart of gold. And as this market went up, it touched as high as $2,800. We're looking at February gold in terms of pricing so that our listeners and viewers have a good sense of what it is. And we finished a full cycle of an Elliott wave count, which is waves 1 through 5, called the motive phase, which means we go into the corrective phase. Corrective phase is typically an ABC correction. So we went from above 2,800 down to this low at 2,566. That's labeled the A wave. And then typically on a B wave, the basic model is it will fall anywhere between 50 and 75% of the drop in the A wave. And you can see that as it came back up, it came up to 2742. The high that is predicted at 75% is 2762. So not really in the middle, but just above the middle. Now we're in our final C wave, and this is what's thrown many traders off. On a C wave, you're typically going to get a hard fall like you did here. However, you had that strong sell-off day from 2742 down to 2651, one of the largest daily price declines, if not the largest, this year. And we expected it to continue to trade lower. I'll talk about where I think it could go, but the last out of the last 4 trading days, 3 of them were up. So it seems counterintuitive to the models that we use, at least. I think that we could possibly get what's called a truncated C, meaning it doesn't go to the low achieved, which is 2566, or lower, which would take it as what's called a standard zigzag. We have to realize as a technician that fundamentals are going to drive the market. The technicals are really good for areas of support and resistance where we look for tops or bottoms. They don't guide the direction. Traders guide the directions, the flow of money into the markets, whether they're buying or selling or sitting on the sidelines. That's the key. And so I think we could get a little pop here. It could be over today. We could get a little pop here. If it breaks above, let's say, 2690, then I think the correction's over. And the way this theory works is it's an 8 count. Waves 1 through 5, the motive phase, your ABC correction, the corrective phase. All things being equal, the clock restarts. And I am adamant about believing that we'll continue to do what's called a bull count. A bull count obviously happens when the market is moving higher. And so I expect that next year is going to be a really, really strong year for gold. But in terms of the call right now, as we look at it through the eyes of a daily chart, and I'm going to do one thing for our viewers. I'm going to convert this to what's called a Henkinashi. And a Henkinashi is a Japanese average chart. And you notice it looks a lot like a candlestick chart with one key difference. The open is not the true open, but rather fixed from the midpoint of the prior candle. On daily candles, it's the midpoint of the prior trading session.
Gold's resilience amid fluctuating market conditions highlights its enduring value as a strategic asset. With technical indicators signaling potential upward momentum and macroeconomic trends favoring its appeal, the metal is positioned to maintain its status as a cornerstone of financial stability. As global uncertainties persist and central banks continue diversifying their reserves, gold's long-term outlook remains promising, offering opportunities for investors to capitalize on its strength in the evolving economic landscape. What are your thoughts on gold's ability to maintain its upward trajectory in the current economic climate? Share your views in the comments. Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.